What's up, traders? In this video, we will be discussing a negative confluence that you can be on the lookout for when managing your trades. So stay tuned. In order for us to do this, I want us to take a look at a loss that I took on NASDAQ this past week in this area in here. Now, as we can see, price is trading bearish on the 50-minute time frame. Our last break of structure is this bearish break in here. You can see that our internal structure was trading bearish, which was obviously facilitating the impulsive phase, which ultimately generated that break of structure. And then in this area here, we had our change of character. This is obviously the failed to create change of character variant, and when this internal break to the upside took place, this signaled the start of our 50-minute pullback. That obviously allowed us to define our bearish range with our 50-minute strong high up here and then our 50-minute weak low down here. Now obviously, because we have this bearish range, the anticipation is for price action to pull back into a well-priced area, i.e. into premium, and then after mitigating a well-priced POI, anticipate potentially a continuation of this bearish structure. So I identified this 15-minute supply zone in here as the first well-priced POI within this range where that bearish continuation could originate from. And if we take a closer look at this 15-minute supply specifically, what I liked about this area was the fact that it swept some internal liquidity prior to its formation. We have a really nice amount of imbalance that sits just below the area. And then because of the way our change of character developed in here with that FTC model, this internal lower high was providing really nice liquidity for this particular supply zone. So this is why I identified this as a really nice area. Now, as you can see in our range above this 50-minute supply, we have a 1-hour supply in here and a 50-minute supply in here at the extreme, which meant that there was potential for a deeper 50-minute pullback into this range. Now, straight off the bat, with this 1-hour supply, the fact that it sat at this London high meant that there was a really good chance that if we were to see a deeper pullback, that it would be swept, potentially even violated because of the liquidity pool that sits in there. So at the time when I was doing my analysis, I thought to myself that realistically, if we are to see a deeper pullback, price action would likely look to trade towards this extreme 50-minute supply. So now that I established all of the different possibilities associated with this range, I decided to place a limit order directly at the open of this 15-minute supply zone. I was more than happy to take a trade in this area, even though there was potential for a deeper pullback, purely because of the fact that this POI represented a high probability POI for me in terms of my trading plan. I gave a sufficient amount of breathing room for the trade in terms of my stop loss, which was placed in here. And then I was obviously looking to target the 15-minute weak low down here. Now, when faced with a scenario like this, obviously you can first wait for price to mitigate your POI, and then you can wait for that internal structure shift to signal the bearish intent before you look to get involved in the trade. Now, if we play price forward, you can see that we get another bullish internal break to the upside, and then price action taps into our 50-minute supply zone and triggers me into the trade. Now, I got triggered into the trade at about 5:15 p.m. local time. After this mitigation, I was now looking for price action to roll over and to give me that bearish continuation. The next area of interest for me was going to be this internal low in here. Realistically, if we were to see that bearish continuation take place, price action would violate this low in order to give us that bearish intent. And then sure enough, after the mitigation, we immediately get a violation of that internal low. Now, because of the fact that this is the low that gave us the mitigation of supply and that tapped us into the trade, this is obviously that first decision point for us where we can either close some partials, where we can maybe look to move our stops to break even, or where we can simply just do nothing. In this specific scenario, I decided to do nothing. And the reason I decided to do nothing is because after price action gave us this new internal break to the downside to potentially signal that bearish intent, we got the formation of another new 15-minute supply zone, which is represented by this inside bar candle here. Once I saw this 15-minute supply form, I was then telling myself that I was going to wait for price action to come back in, and I wanted to see how it would interact with this area. If this supply held and if we got another bearish push to the downside, I would then look to potentially close some partials at the next internal lower low that formed, where that pullback originated from. So I didn't want to be too aggressive with managing this trade and moving my stop to break even, because essentially at this point there wasn't that much structure that we could depend on. But we did have this supply area that we anticipated a pullback into. So I just didn't want to be that aggressive. As we play price forward, after we get that internal break, we do get price action coming back in to interact and mitigate our 15-minute supply. And so now, after we see this mitigation, this now becomes that next decision point for us in terms of structure. This would now be the area where if we do get a violation or if we do get an interaction in here, this would now be that area where we potentially look to manage our trade. After that initial mitigation, we get another little tap into the area, a slightly deeper mitigation of 15-minute supply, and then we get this bearish reaction out of the area. Now I want you to pay close attention to what happens next. Price action experiences another bullish push to the upside in here, which ultimately generates this internal break to the upside. And this is the negative confluence that I wanted to point out to you guys today, because effectively what happened here is price action tried to trade lower, all right, but it couldn't do so. It didn't have enough bearish momentum. What happened instead was it returned and it violated this internal lower high, which essentially failed to create a new internal lower low, and which essentially failed to facilitate a resumption of that internal bearishness. With price action violating this low and closing above our new 50-minute supply here with this candle, we can now deduce that this 50-minute supply was not strong enough to generate that push to the downside. Internal has now shifted bullish again, and we could now be seeing a deeper 15-minute pullback, initially towards this 1 hour supply, and then further beyond that, this extreme supply in here. So what I did after seeing this scenario play out here, even though I had my stop loss, I decided to manually close my trade in here just shy of my full stop loss being hit. And what you'll notice is after I manually close my trade, price action does eventually end up trading higher, continuing with that new established internal bullishness to ultimately in the next day push up and hit my full stop loss during that Asian session. So what I managed to do is essentially reduce the loss that I took on this position because of the fact that I identified this negative confluence. Now it's important to understand and take note of the fact that when I placed a sell limit order on this POI, I already accepted the risk associated with this trade. I already accepted the fact that there was potential for price action to hit my stop loss because of the presence of those 50-minute supplies further up in the range. But because I was able to see this negative confluence, and I was fortunate enough to be at my charts when this negative confluence printed, I was able to reduce the loss that I took ever so slightly. And the reason I point this out is because I don't want to create a scenario where you guys are always looking for a reason to close your trades early. By all means, you guys can go ahead and wait for price to either hit your TP or to hit your stop loss. But when it comes to managing the trade, this is a negative confluence that you can keep an eye out for. And then if I bring you guys over to my MetaTrader 5 very quickly, you'll see that this is that point after the close of this bullish candle in here where I manually closed my full position. My stop loss was placed slightly higher, just around about in here, and was ultimately hit the following day. So definitely feel free to take note of this negative confluence, see whether or not it's something that you would like to implement into your trade management approach and into your trade management style. And remember again that there is absolutely nothing wrong with allowing price action to either hit your full TP or to hit your full stop loss after you have entered the trade, as long as you make sure that that is something that is based off of sufficient data that you have collected over a period of time, either through back testing or forward testing, that has showed to provide consistent returns and a positive return over a period of time. As always, I appreciate you guys so much for watching, and I'll see you in the next one.